We hire hundreds of people a year. We train thousands of people a year. All of the activity is enterprise software. It turns out that once a quarter we do a Bitcoin transaction. On August 10th of 2020, we embarked on a Bitcoin strategy. And when we did that, the enterprise value of our software business was about $66 a share. And as I'm speaking with you right now, the stock is trading $329 a share. Our shareholders have made billions of dollars since we started this strategy. No one's lost. If you actually look at the performance of Bitcoin since we actually bought $250 million of it and embarked on a Bitcoin strategy, Bitcoin's up 101%. That's the S&P's up 23%, the Nasdaq's up 15%, gold is down 12%, bonds are down 15%, and silver is down 28%. So in fact, Bitcoin smashed every single asset. The only thing that outperformed Bitcoin in that time period is MicroStrategy stock, up 166%. So we actually performed 1.6x Bitcoin. Now, if you look at what we could have done, we could have competed with the enterprise software companies in our industry. The best performing enterprise software company in that time period is Oracle. Oracle's up 39%. MicroStrategy's up 166%. IBM's up 2%, Salesforce is down 4%, SAP's down 40%. We're definitely not losing. Now, if you want to compare us to the best companies on earth, the strongest companies on earth that are more powerful than governments would be Google, Apple, and Microsoft. Those three big tech companies are up 58%, 46%, and 34% respectively. Amazon down 11%, Facebook down 35%, Netflix down 52%. MicroStrategy up 167%. And one last factoid, out of the 500 S&P companies, there are only 14 companies that outperformed us in the time period. We outperformed 97% of the S&P, and the ones that outperformed us, you could have guessed, are like energy companies, and they were selling oil when oil hit $0 a barrel, and their stock smashed back. So, we're totally fine. I'm fine. The company's strategy is working well. If you had said in the second quarter of 2020, I want you to come up with a strategy for a low-growth, mid-size software company to outperform every asset class, all big tech stocks, and every enterprise software company by a factor of 3 to 10, right? This is the only one that you could have come up with, and we actually did it. I think what throws people off is that the stock got volatile. Like the way we've done it is with volatility. The company's stock traded a few $1 million a day when we started. Now it trades hundreds of millions of dollars a day. The open interest and the options have exploded. The stock, has exploded up, exploded down, exploded up. It moves all around, just like Bitcoin, which has gone through almost 3 cycles in the past 2 years. So I would say, to summarize, conventional critics and conventional mainstream analysts, they don't get the crypto economy. They don't understand Bitcoin. Demanded by 40%, single-family homes in the U.S. have increased in price 40%. If you had $500 million, it would have bought you the 40% less today than it would have bought you 2 years ago. So we had to do something for our shareholders at the time, and that something was buy high-quality digital property. And our choice was, we could suffer a non-volatile slow death, or we could get on a bumpy lifeboat, a big orange lifeboat, the Bitcoin lifeboat, and we're going to get tossed around in the ocean, but we're going to float, and we're going to appreciate over time. And when I started buying this stuff, Bitcoin was $9,000, $10,000 a coin. And we've just been consistently accumulating Bitcoin. We have not sold any Bitcoin. And if you're a short time horizon person and you want to look at making a trade in the past 3 months, shares. And I started the company 33 years ago. So I've been the CEO for 33 years. I'm the chairman of the board. I'm the controlling shareholder. And I've been talking about Bitcoin for 2 years. And about 2 years ago, we promoted a gentleman, Phong Le, to be the president of the company. And he was the president and the CFO. So he's been running the day-to-day business hands-on as the president for the past 2 years. And 99% of the activity of the business is selling software. So we have 2,150 people. We sell software, we make software. We have thousands of customers. We do thousands of transactions a quarter. We hire hundreds of people a year. We train thousands of people a year. All of the activity is enterprise software. It turns out that once a quarter we do a Bitcoin transaction. And I talk about it a lot. So if you think about it, you realize that, it's very logical for the CEO of the company to be the person to do that as the chairman of the board and as the chair of the investments committee, where we provide oversight for Bitcoin acquisition, and maybe once a quarter we might do a big deal, like borrow 200 million or issue equity or something, or we might buy Bitcoin, but it really is something that can be best supervised at the board level. And the path for Phong to be CEO has been set in stone. Well, it's been set for years and years. He was promoted to Chief Operating Officer in 2018. And he's been the CFO of the company since 2015. So after 2 years as president, it made sense. It's very clear to the shareholders he was the heir apparent. And we hired a new CFO, a full-time CFO, Andrew Kang. He joined in May. And so once Andrew joined as CFO, that cleared the way for Phong to become president and CEO. I have been working with him hands-on to transfer the entire business to him for 7 years. It turns out that in the last 6 weeks, Bitcoin traded down. And when Bitcoin traded down, we ended up taking indefinite intangible charge in our Q2 results. That by the way, it's like a $900 million charge. It was very colorful. I think it was cited by some critical journalist. But we'd already covered 700 million or 750 million of that charge by the time we even reported it. It's just that GAAP accounting doesn't let you write up your assets. So if you're positive, you say, okay, well, this is normal succession and appropriate corporate governance. If you just want to write something trollish, you would pair the non-cash write-off with me taking the executive chairman role, but obviously it has nothing to do with that. It's always been the plan for me to be executive chairman and for Phong to be the... Because we were waiting for... We don't run the company based upon Bitcoin volatility. And we don't run the company based upon indefinite intangible accounting charges. That would be putting the interest of our shareholders after the optics of a random troll. We run the company based on what's best for the shareholders and what's best for the employees and what's best for the customers. So the trigger for us to promote Phong was the arrival of Andrew as the CFO. Because Phong was the president and CFO, and you can't have a public company where the CEO is also the CFO. It would be inappropriate to do that. Like, only in the most dire of circumstances would you ever do that. So when Andrew arrived, we wanted Phong to be CEO, and the accounting charge is an intangible, non-cash charge. Really, again, as I said before, Bitcoin traded down to 17,600. We wrote our assets down to that level. Bitcoin is trading at 23,900 right now. We haven't written it up, but I mean, the shareholders understand this. You can see in their reaction to it. The way to think about investing in Bitcoin is you should only invest what you're going to hold for 4 years or longer. And ideally, it's generational wealth transfer. And then you should dollar cost average into it. And for the average person, if they dollar cost average into it as a strong long-term store of value, they'll be fine. And the metric you ought to stare at is probably rolling the simple 4-year moving average, right? And if you look at the simple moving average over 1,458 days, it very rarely touches that point. It went slightly below it in the depths of the crypto crisis, and now it's trading above it. That number is 22,266. So if you think of that and you say, I know I'm going to hold at least 4 years, then it isn't that anxiety inducing. If you have a short time horizon, like you want to make money in 4 weeks or 4 months, it's going to be much more stressful because it is a volatile asset. And the volatility impacts two types of people. It impacts people that are short-term investors, that they want to make a quick buck or they just never want to lose money. And the volatility also impacts public companies or companies that rely heavily on GAAP accounting, because the volatility is detrimental to the accounting treatment because you have to always write it down. You can never write it up. And so you end up with a circumstance where you could be holding $1 billion and it looks like you have $200 million and no one can tell the difference unless they go to the trouble to figure it out themselves, and that's very opaque. So I would say that people that really are fixated upon GAAP optics, right, they'll be a little bit troubled by it, and then people that have very short-term time horizons are troubled. But for the rest of the world, it's a pretty good idea. It's the best. I've just pointed out to you, we've outperformed every asset, every big tech company, every enterprise software company, 97% of all the companies using this strategy. So if the volatility is the price you pay for the performance. And if you can't stomach the heat, right, you can't be in the kitchen. So I would rather win in a volatile fashion than lose slowly in a non-volatile way. I mean, if we're talking about what's caused the crypto crash, I think that it was triggered first by the interest rates, right, the tightening of the Fed. And that put pressure on all risk assets from the beginning of the year. And I think the next catalyst was the Terra Luna meltdown, because in essence, they had $50 billion worth of Luna and UST backed by $1 billion or $2 billion of real assets. So that was very unstable, and that algorithmic stable coin was just an accident waiting to happen. It's almost like they borrowed $20 billion and agreed to pay 20% interest on it. And they were going to issue equity to pay the interest. So they're going to issue Luna in order to pay 20% interest on UST through that protocol. And that was an accident waiting to happen. There's no way that was sustainable. So that melted down a lot of the cryptos and resulted in the unwinding of the Three Arrows, Voyager, and Celsius bets. And I think a lot of people took a lot of inappropriate risk, right? The cryptos were unregistered securities, but then loaning out hundreds of millions of dollars without collateral or under-collateralized loans amongst the crypto hedge funds, that created a margin call run. And so they ended up becoming forced sellers and liquidating positions in a panic. And that took us all the way to 30,000. And I think the Celsius thing was the straw that broke the camel's back, where Celsius just completely unwound. And you had a whole set of panicked liquidations as counterparties seized assets and seized collateral and sold it at the market. So that's what takes the market down. And now the market, I think, has probably bottomed. And it looks like it's just looking much better. It's gone from 17,000 up to 24,000 now. But I make the other fundamental point. If you're a short-term trader, this drives volatility, and this is very meaningful. And if you had a weak balance sheet, this is devastating. And if you trusted any of the crypto wildcat banks, right, it's tragic, right? Anybody that put their money in Voyager or Celsius or the like, or gave money to Three Arrows, is awful. But if you look at the fundamentals are you have the head of the SEC endorsing Bitcoin as a commodity. You have the head of the CFTC, ready to endorse Bitcoin as a commodity. You have multiple senators endorsing Bitcoin as commodity. You've already heard Janet Yellen endorse Bitcoin as commodity. We just saw today the head of the central bank in Brazil endorsing Bitcoin technology. And so the fundamentals are really good. We just had Larry Fink, and BlackRock, in essence, endorsing Bitcoin by saying that they're going to sell their institutional customers Bitcoin on the BlackRock private wealth management system. So what I see is Bitcoin emerging as a institutional investment grade asset being embraced by regulators, legislatures, and large-scale investors. And the entire market's been very educated by this crypto crash. Now it's obvious to people the difference between the good, the bad, and the ugly, right? The good would be a stable coin backed by cash equivalents that are transparently published every week, like Circle, right? The bad might be a tether, which it works and they're competent, but it's opaque. And the ugly is the UST that just completely melts to zero. And you could likewise say Bitcoin is the good, right? It's a digital commodity, decentralized, with no issuer, without counterparty risk, non-sovereign store of value. And then you've got all the other creatures, many of which are unregistered securities, and this has lit a fire under legislators and regulators. I think they're going to accelerate all their regulatory initiatives, and that is educating the market. And ultimately, you have hundreds of billions of dollars that wants a long-term store of value because currencies are crashing everywhere in the world. And the thing that holds anybody back from buying Bitcoin is uncertainty about its classification and the way it will be treated by regulators. So as the regulation gets clarified and as people get illustrations of the difference between Bitcoin and Luna, right? It used to be people aren't quite sure about the difference. Well, in fact, a lot of people thought DeFi is better. You get a 20% yield on your DeFi and Bitcoin is dead money. And now they realize that, there is a counterparty risk to pursuing this. And this has educated the market, very, very effectively in a painful way, but in a rapid way. And I think it'll catalyze the maturity of the asset class and the institutionalization of Bitcoin to the benefit of the Bitcoin holders and the ecosystem.